Welcome to our third lesson in our series. And in this lesson, we will talk a little deeper about the three various market patterns. We talk about support and resistance, and then we talk about market structure, like the change of characters and then the break of structures. Okay. We mentioned in our previous lesson that at every point in time, the market is existing in one of these three patterns. Okay, so it is essential that you understand what the market patterns are, and so that every time you look at the market, you know exactly what you are looking at. All right, and um, to identify these markets, you have to understand that they all have characters. Okay, they have certain characters that define who they are. And so when you see the character on this market, then you understand that I'm looking at a bullish market. And when you see this kind of character on the market, then you know that you're looking at the bearish market. Okay, let's begin with the bullish market. Okay, right. The bullish market has two outstanding characters. Okay, and we call them higher highs and higher lows. Okay, I'm going to illustrate on the chart. As you can see on our price action over here, the price started from this region over here, and then it has this impulsive move has taken the price to a higher region. And once price hit this region, um, it paused, and then we saw, or we can see a correction happen. Okay, and there's a correction forming, and we spoke about corrections, and we said they are short-term counter trend movement. Okay, and then they're just like a breather where the market will put itself together to continue the trend. Okay, so because the price started from a lower region and is currently it got to a higher region, right? We'll mark out this higher region where price paused to take a breather, and then we'll call it a higher high, right? And we call it the higher high because the price started from a lower region, and this current region where price decided to pause is higher than where it began from. Okay, and then we'll consider the correction or the retracement. If you notice, when price took that short-term breather, it got to a certain point where the trend felt like it was ready to continue, and so the buyers kicked in, and then there's another impulsive move, okay, to the upside. And so this point where price got to where it decided it was ready to continue is what we call a higher low. And we say it's a higher low because this lower region is also higher than the lower point it had started from. Okay, it's higher than the price before that brought it all the way here. Okay, let's look at another example. After the price had taken a breather and was ready to continue, this impulsive move came all the way to the upside, and it came to an even higher region. We call it a higher region because it's higher than the previous region which was formed over here. Okay, and so we'll also label this new higher region and call it a higher high. Okay, and then as the market behaves after an impulsive move, you see a short-term retracement. Okay, and then this is our correction to the downside. And once again, the correction to the downside after the market had taken a breather, it continued to the upside, and in that movement the low it had made was also higher than the previous low it had made before. Okay, and so on and so forth. This is the character of a bullish market or an uptrending market. Okay, it makes a higher high, and then it makes a higher low, and then it keeps going in that direction. The market comes, makes a move, an impulsive move, and it pauses to take a breather. And once it's done, it corrects, it makes a retracement. And when it hits a certain point of relevance, it makes another impulsive move. And this impulsive move, you'd notice, will take out the previous high. It goes higher than where it was stuck before, and once again it makes another retracement, and the retracement will also be higher than the previous retracement. Okay, and so when you see a market moving in this character, you call it a bullish market. And then it's important to take note of the higher highs and the higher lows and the higher highs and the higher lows. Okay, so this are the outstanding characters or the two main characters of a bullish market. Now let's consider a bearish market. similar to a bullish market, a bearish market has two main characters, okay, two defining characters, and these are lower highs and lower lows. Okay, let's illustrate it on our price action movement over here. You would observe that price came from a higher region over here, and then it descended to this point, right, where it decided to take a breather, and then and um, you notice that when price decided to take a breather, it went a bit higher. However, this movement to the upside um, didn't go as high as the original start of this impulse. You see, it just made a weaker high. Okay, and so when the price makes a weaker high or a high that is not as high as this, therefore a lower high, we label this as a lower high. And in this impulsive movement, which caused price to go lower, we would label this as the lower low. Okay, and just like in the bullish market, the market makes an impulsive move, it makes a correction, and then after it has taken a booster and it has put itself together, it makes another impulsive move. And this impulsive move, as you can see, brought price even lower than the previous point it had got to. Okay, and so we label this point as a lower low because price has gone even lower, and then you notice the retracement, and then even though price made a correction and went a bit higher, it didn't come as high as the previous high point over here, and so we would call this another lower high. All right, and then we have another impulsive move after the lower high because the market has taken a breather and is ready to go, and then we have another impulsive move that comes to the downside and creates an even lower low. Okay, so you label that as a lower low, and then just like a market behavior where we go back and forth, um, a correction also comes, and then the correction doesn't come as high as the previous lower high, and so you label that as your lower high. Okay, and this is the character of a bearish market and a bullish market. These are the characteristics that define them. Okay, and really quickly we are going to talk about a consolidated market. In the previous lesson we defined that consolidating markets are markets that don't really um, move in any specific direction. Okay, they just range, they just bounce along certain ranges. Okay, and so this is a consolidating market, and a consolidating market will be our segue into the next topic: support and resistance. Okay, um, we call a resistance and a support certain regions where price has specific reactions. I'll try to explain. Let's take a resistance for an example. Okay, um, a similar or another way to describe a resistance is what we call a ceiling. Okay, a ceiling. When price gets to a certain point where it's not able to go above, we'll call that, it's like hitting a ceiling. We'll call that a resistance. Okay, something is resisting the price from moving higher, and then when price drops to a lower point and is not able to go beneath or is not able to go below, we call that a support. It's like on the ground floor, and then the ground floor and the ceiling. Okay, so in this consolidating market, the price is bouncing between the ground and the ceiling, the ground and the ceiling. It's bouncing between resistance and support. So support and resistance are any regions where price has specific movements, and the resistance acts like a ceiling. Okay, it's a price movement that is above, and price is not able to break above it and go beyond it. My support is a region beneath that price is not able to break and go below. Okay, that is a support and a resistance. So we've labeled our resistance and support. Once again, a resistance is much like a ceiling. Okay, there's a region where price finds a hard time breaking above. Okay, and then support is also like the floor. There's a region where price finds a hard time breaking beneath. Okay, or there's a region on the ground where price is able to bounce off, and then the resistance is like a ceiling, and price hits it and then is able to drop down. But support and resistance do not only exist on consolidating or ranging charts, okay? They exist on every other kind of chart. So we'll consider support and resistance on our bullish chart over here, okay? With this impulsive move from this from this point to this high point, you notice that when price had made this impulsive move and it made this higher high, it couldn't go any further, okay? And then it had to take a breather to gather itself to create the next move, okay? So this ceiling where price hit and was finding a hard time going beyond, because think about it, this impulsive move could have come all the way to this point and stopped and then take a breather, could have come to this point and stopped, but it came all the way to this region, and once it got here it couldn't continue and it had to take a breather from that point. And so the ceiling it hits here, when price gets to a region where it's not able to continue, we consider that um, resistance. And then when price took a breather, you notice that the breather could have ended right here, or it could have ended here, or it could have even gone lower. However, when the price got to this region right here, it decided to stop and continue. So this acted as the support. You see, this was where price found enough ground to jump off, just like how we likened it to the floor. So this is where price could step and then make another move, okay? And then you notice that after price has collected itself, it made an impulsive move, which then went higher than the previous resistance. And that impulsive move as well hit a resistance on its own. It hit another ceiling. So it's like climbing a building and then you hit the first floor and then you're on the ground floor and then you try to go up, but there's a ceiling and so you climb, and when you finally climb and you're on the first floor, you have to go to the second floor, and then from the second floor you go to the third floor, okay? And so this region over here, because let's say this was the ground floor, right? And then we have broken past this ceiling and then we are now on the first floor, and we have a new ceiling which is the second floor above us, right? The market couldn't go any higher, so it had to take a breather. And so it formed a support right here in this region over here. The market formed the support. And then with this support, now price is no longer on the ground floor, it's on the first floor. And so it finds it easier to climb up to the next floor. Okay. And so price bounces off of this to hit another resistance up here, and then once again it puts itself together, and then um, it finds support and continues to the next floor, and so on and so forth. Okay, and this is how support and resistance works in a bullish chart. When price gets to a point where it's not able to go any further, it has hit a resistance, it has hit a ceiling, and so it will look for grounds where it can stand and put itself together to make the next move. Okay, so we have a support, we have a resistance here, sorry, and then we find the support. Once again, a resistance and then a support, a resistance, and then a support. Okay. Now let's consider this on the bullish chart. On the bearish chart, sorry. In this market, you notice price is descending. Okay. It's like to say you are getting down from a story building. Okay. And so you notice that price comes from a higher region, and then it gets to it finds support. It gets to a point where it's not able to go below, and then price takes a breather, and then it finds resistance. It tries to go higher, but because it has just descended from a certain floor, and then price is looking to go all the way from the story building to the ground floor, there's no point in climbing back high. So it gets to a certain point and then it realizes, ah, I have to go down to the next floor beneath me. And so price finds a resistance, and then it moves even lower, and then it finds support once again. Okay, and once it's on the lower floor, and then it just takes a breather, and then it finds resistance because it tries to go higher, but then the price will think and realize that, I'm trying to get to the ground floor. There's no point in climbing all the way to the third floor and the fourth floor again. Okay, so it hits a resistance like a ceiling, and then it drops from that point, and then it finds another support. Okay, and then we notice price also makes it takes a breather, and then it hits another resistance over here, and then um, it drops. Then price just keeps descending until it finally gets to the ground floor. Okay, to the point where it's looking to, where buyers are looking to get involved. Okay, so this is the concept of support and resistance. The support is it's like the floor where price gets to, and then finds a hard time breaking, and then a resistance is like a ceiling, a point where price gets to, and then it hits a brick wall, and then has to make a decision after. Okay, so this is the concept of support and resistance. Now, we'll talk about market structure in the sense of change of characters and break of structures. Okay, this is really important to understand. We'll start off with the bullish market. We'll talk about break of structures. A break of structure is a concept used by traders, okay, to identify the progression of a trend. Okay, and then we say a break of structure has occurred when price clearly pushes past a support or a resistance. Okay, let's take examples. In this bullish chart, as we labeled earlier, this is our resistance because when price got to this region, it found a hard time getting past this, and so it had to take a breather and put itself together, and then make a move that finally went beyond past this resistance. Okay, so if we take a tool, trend line tool, and we mark out the point where price got to and found it hard to move, we notice that um, after price had taken a breather, it came all the way to the upside, and then this it broke past this point, this resistance. Okay, creating a new resistance. Okay, and the moment we see something like this happen in the market, we call it a break of structure. Once again, we say a break of structure has occurred when price clearly pushes past or breaks through a previous resistance or a support. So this used to be a resistance, okay? And then after price took a breather because it hit this wall and it hit the ceiling and it wouldn't go any further. After it had made a correction or a retracement, the next impulsive move had enough momentum to break beyond the previous resistance, okay? And that is what we call a break of structure. And so traders use this to consider the progression of a trend. And if you consider the same thing happened over here, okay, um, the market kept breaking structure. It will pick up momentum when it hits a brick wall. It will pick up momentum. It will retrace for a little while, create a higher low, and then it will break the structure. And it kept doing that. And so this is a break of structure to the upside. This is a bullish break of structure. And so we'll consider a bearish break of structure. In this bearish market, as you can clearly see, the price came from a higher point over here, and then it dropped to a region where it found support because it hit the floor and it wasn't able to go any further. Okay, and after that the price took a breather or it made a retracement and formed a lower high, and after it had done that, and the price was ready, it had gathered enough momentum, and then the next impulsive move, as you can see, came all the way and broke this previous support. Okay, and when that happens, we'll say a break of structure has occurred because a break of structure um, is when the price pushes past a, a resistance or a support. Okay, and then as you can see, the price broke the structure and then it went to hit another support. It found support again where it couldn't go any further. And once again, the price took a breather, formed a lower high, and gathered enough momentum, then finally broke this support, and then after it had done that, it found a new support down here. Okay, and then after I found a new support, it wasn't able to go any further. Once again, it took a breather, it retraced for a little bit, gathered itself, and when it felt like it was ready to make a move, and it had enough momentum to finally break this support that we found over here. Okay, and so every time price breaks a resistance or a support, we call it a change. No, I'm sorry. Every time price breaks a resistance or a support, we call it a break of structure. A break of structure is used to track the progression of a trend. You see, um, we use it to see the performance of a trend if we are still moving in a specific trend. And having spoken of break of structures, now we are going to talk of change of characters. Earlier in the course, we said that the markets have individual characters that define them. Okay, the various market types have individual characters that define them. And so we say a change of character has happened when the market stops behaving in a specific character and adopts another character. Okay, so we are looking at the bearish market right here. Let If the market decides to stop behaving in a bearish manner and starts to act in a bullish manner, then we'll say a change of character has occurred. Okay, let me illustrate this. Let's observe this market. Okay, now we're looking at a bearish market. Okay, the market started out really bearish. It made a lower low, a lower high, a lower low, a lower high, kept breaking structure, a lower high, made a lower low, a lower high, broke the structure, and then it formed a lower low finally. And after it had formed a lower low, we understood that the character of a bearish market has to do with lower lows and lower highs. Okay, so after this market has formed a lower low, if the market is going to remain bearish like it has all this while, what we expect to see is a lower high and a break of structure once again to create a lower low, and then so on and so forth, and it will keep moving. However, in this case, you notice that when price had made this lower low over here, um, it didn't go any further. It pushed up to create a lower high. However, it pushed up and finally found resistance at this point right here. Okay, right here. You notice the market found resistance at this point over here. Okay, before taking a breather and finding support in this region over here. Okay, and if you notice closely, um, the supports are suddenly are getting higher. You see, the market is now creating um, higher lows, right? And then higher lows, as we said earlier, higher lows are the characteristics of a bullish market. Higher lows and higher high. And so you notice that all of a sudden the market is now creating higher highs and higher lows. And that is the opposite of what a bearish market should look like. Okay. So now let's find a change of character. This is how to identify the market has changed a character. You see, from our previous study, we understood that a bearish market should make lower highs and lower lows. That is the character. However, when it got to this point where it had finally made a lower low, the retracement, or what was supposed to be a short-term counter trend movement, came all the way to this point and then took out the previous resistance, which was right here, the previous lower high. Okay, it took it out